Forex trades feel smooth, while others feel completely chaotic. Why one pair moves calmly and another suddenly explodes without warning. Here's the truth most beginners learn the hard way. Not all currency pairs behave the same. Some are stable, some are fast, and some can wipe out your account if you don't understand them. Today, I'll break down major, minor, and exotic currency pairs, what they really are, how they move, and which ones you should trade first if you're serious about surviving and succeeding in Forex. Let's rewind for a second. If you've ever traveled abroad and exchanged your money, you've already used the Forex market. Forex, short for foreign exchange, is where currencies are bought and sold. But instead of planning vacations, traders are trying to profit from price movements. And this market is massive. We're talking over $7 trillion traded every single day. At the center of all this action are currency pairs, because in Forex, you never trade just one currency. You're always trading one against another. Take Euro-US dollar as an example. The first currency, Euro, is the base currency. The second, US dollar, is the quote currency. If Euro-US dollar is trading at 1.10, it simply means 1 euro equals 1.10 US dollars. When you buy this pair, you're betting the euro will strengthen. When you sell it, you're betting the dollar will win. Simple in theory, but here's where things change. Every pair has a different personality. Think about selling an old phone. In a big city, you'll sell it fast. In a small town, it might take weeks, and you may have to lower the price. That's liquidity. In Forex, high liquidity means smooth trades and low costs. Low liquidity means delays, wider spreads, and sudden price jumps. And this is exactly why currency pairs are grouped into major, minor, and exotic. Let's start with the most beginner-friendly group, major pairs. A currency pair is considered major if it includes the US dollar, the most traded currency in the world. Some of the most popular ones include Euro-US dollar, Great British Pound US dollar, US dollar Japanese yen, US dollar Swiss franc, Australian dollar US dollar. These pairs make up nearly 80% of all Forex trading. Why do traders love them? Because they're highly liquid, cheaper to trade, easier to analyze, more predictable. Next up, minor pairs, also called cross pairs. These don't include the US dollar. Examples include Euro Great British Pound, Australian dollar Japanese yen, Euro Swiss franc. They're not bad, just different. Minor pairs have slightly wider spreads, move more during specific sessions, react strongly to regional news. If you enjoy understanding country-specific stories like Europe versus Japan or Australia versus Asia, minors can be very rewarding. Now let's talk about exotic pairs. These combine a major currency with one from a developing or smaller economy. Examples: US dollar Turkish lira, US dollar South African rand, Euro Singapore dollar. Exotics are less liquid, more volatile, highly sensitive to political and economic shocks. They can move fast, but not always fairly. Think of them like spicy food. Exciting? Yes. Beginner-friendly? Absolutely not. Here's the real difference in plain terms. Major pairs are calm and structured. Minor pairs are analytical and regional. Exotic pairs are emotional and unpredictable. The best pair isn't the most exciting one, it's the one that fits you. Before choosing a pair, ask yourself, how volatile am I comfortable with? When do I usually trade? Do I understand the economy behind this currency? If you trade during European or US hours, majors make sense. If you trade Asian sessions, the Australian dollar or Japanese yen pairs move better. Volatility creates opportunity, but it also creates damage. Majors move steadily. Exotics can jump without warning. Smart traders don't chase volatility. They measure it, respect it, and manage risk around it. No matter what pair you trade, always use a stop loss. Never risk more than 1 to 2% per trade. Don't overload correlated pairs. Your goal isn't to avoid losses. Your goal is to survive long enough to win. Some traders love calm charts. Some crave fast movements. Neither is wrong, but trading pairs that don't match your temperament leads to frustration, overtrading, and burnout. When your pair matches your personality, trading feels natural, not stressful. Major pairs teach patience. Minor pairs teach adaptability. Exotic pairs teach respect. Forex isn't about beating the market. It's about understanding it. Trade simple, trade smart, and grow step by step.
Hola Prime. Trade with transparency.